Good evening, everyone. Good evening, my fellow traders. My name is Adam from Trade with Precision. And thank you so much for joining me this evening. I recognize a few of you. Leon, it's good to have you in here. There's a couple actually, there's more than a couple of names I recognize. So thank you very much for joining me. First of all, can I just check the audio? Is the sound good? I've got green lights on my side. So the sound should be fine. It should be, should be plenty. So there's no error signal. So if you could just let me know, type into the questions box. So again, my name is Adam from Trade with Precision, and tonight's topic is Forex holiday opportunities, Christmas through till New Year. Okay, everybody's very quiet. There we go. Hi, Leon. Great, thank you very much. Me too. It does appear as though IC markets are doing fewer webinars, I think in the run up to December and January. So it has been fewer. I used to do at least 1 or 2 a week. It's now down to about 1 every 2 weeks. Not sure about that, but just letting you know that I was aware of that. So we have a risk disclaimer or two to go through. And for those of you who don't know me, or maybe this is your first webinar with me or IC markets, or just your first webinar to do with engaging in the financial markets, I am based in the City of London. I am a trend-based trader or momentum-based trader, so I'm focusing on markets that are moving as opposed to markets that are ranging. I trade any market that is moving, so predominantly currencies, commodities, and the indices, whereas my stocks, my portfolio, my investment portfolio is more just ETFs and equities. And so, yeah, I'm actually more of a day trader these days. Over the last 3 years, as a consequence of COVID lockdown, I have rediscovered my love for day trading, and I've really enjoyed it, and I'm still enjoying it. And so I'm doing quite a bit of that. And so what I would love to do over the next 55 minutes, give or take, is give you a sense of what that is like, how I go about doing it, how I select opportunities, but my approach as we kind of go out. So on the agenda, obviously, recent movements in the major Forex pairs, identifying trends for the end of the year, and building a watch list of Forex pairs, traders to consider. The language is a bit funny there, but I guess building a watch list of Forex pairs that we could consider trading. So what we're going to do is I have got both the platforms open. So I have the MT5 platform and I have the browser platform open. So usually the majority of attendees are using the MT5 platform. So I'm going to stick with that if that's okay with you. If you really have any big objections to it, I'll split it between the two different platforms. They're both good. It's really just whichever one you're most comfortable using. So what I want to do here is I'm just going to close a couple of these out so we have fewer charts to deal with. Let's just go through a couple of these. That's okay. I have a lot of charts open. I don't need that many for this. For tonight, I'll rebuild them. So the first one that I really want to have a look at, there's a couple of things that actually, well, before we get started, because it's not in the slide deck, and I wanted to create a list for you. So things to keep in mind. Things to keep in mind about the markets between, let's say, between Xmas and New Year. Okay, so that specifically, let's say from the 22nd of December approximately to, let's say, 3rd to 5th of January. So every year, because of weekends, it's, you know, it's somewhere around the 22nd, 23rd of December. That kind of thing slow down to somewhere around the 3rd to the 5th of January in general. You will find, okay, so these are things to keep in mind. Volume may drop, i.e. many markets might slow. I get, what's the word I'm looking for here? I was going to say just begin to range or slow down. Okay. Moves might be smaller. This is something to keep in mind. Occasionally, and this is true, has been true in my experience, occasionally there will be one or more markets that will trend like crazy. So this can happen. Okay, so this can happen. It's happened in the past, but the market moves are not really the same. You'll find that a lot of markets can kind of slow down a bit, and then you might find one or two instruments are trending like crazy without much resistance. So there's opportunities for both. Also, please keep in mind that there can be public holidays during the, what's the word? Sprinkled in between those days. Okay, so for example, you might have, the market could open on a Monday and be open on a Monday and Tuesday, and then Wednesday it's a holiday, so the markets are closed again. And then it opens again on the Thursday, and then the Friday it kind of shuts down. So you get those things. So for this reason, I want to say that for this reason, day trading is probably better, and consider closing trades sooner. Okay, I hope that makes sense. So you don't want to leave them over those holiday nights, because you could get gaps in the markets, because it's like a weekend close, and if your stop loss is 5 or 6 or 7 or I don't know 15 pips away, you could have a gap of 20 pips if the market reopens. So basically, in this particular case, for this particular time of year, you might prefer to close your trades out, make sure that you kind of close them out if you're heading into a holiday during, if that's going to happen. Or if you maybe find the market isn't going anywhere, then just consider, okay, these are sort of a little bit of unusual times. Like I said, if it's moving, it's moving, but if it's not, you might want to consider potentially cutting those trades short. Possibly also lowering the risk, or just, but just being aware of the market conditions. So that's kind of what I would start off with. Okay, that being said, also something else that you could do, by the way, is that you could use this time to read trading books or audio books that maybe you've been meaning to do. This is a really good time to skill up, because for once there's going to be less happening in the markets than normal. There are still things happening, and you'll be it's a good time to just do your analysis or your books, anything like that, where you can really improve your skills when you're not trying to choose between trading and work and other kinds of non-trading activities. So good books as well, by the way, if you're looking for it, are obviously Trading in the Zone is the main one. Mark Douglas, like that's everybody should read that. It should be required reading. I think another one that I really like is called Thinking in Bets. That's by Annie Duke. So Trading in the Zone is Mark Douglas. Okay. These books will just teach you not just about trading, but about things in life. This is a really interesting one. It's called Be Water. It's a video documentary on Disney Plus. You might have it. I think you can watch it find it elsewhere. And it's about Bruce Lee's approach to martial arts. It's an hour. It's not very long. But there's a lot of stuff he says in there, which is very much about, which could apply to trading, which is a lot of trading is about, ironically, is our mind can get in the way, our self-confidence and our behaviors and the way we kind of think about things can get in our way. And you have to learn to simplify things and trim things away. And after a while, you have to learn to not think so much. You're trained. So it's not like you're not thinking clearly. You've trained yourself to have skills, but then you don't want to overthink things. I thought that was really interesting. So anyway, those are kind of things that you could do. And most of that's easy stuff. Light reading. It's not it's not going to feel like you're giving up your holiday for that. Okay, so the next thing that I want to cover here is I want to have a look at the dollar. So why is the dollar important? Well, the US economy is still the biggest economy in the world. It's absolutely gargantuan. Some of you have heard me say this before, but at the end of World War II, the US possessed 95% of the world's wealth. Okay, it's still gargantuan, and compared to that, it's still bigger than, like, excluding China. And China currently is going through massive difficulties. So although people were thinking, well, China was over going to take the US, right now, China's not in a great position, and the US is actually looking pretty good. So my point is that there's a lot to say that the US is still very, very strong. And that is, and also a change like that would take 50 years. It wouldn't take 5 years. It would take a very, very long time for one power or empire to be overtaken by another. So don't so think about it like that. But so people think, oh no, I need to start adjusting now. It doesn't work that way. And if you take China out of the mix, you have like the US's economy is still bigger than the next 8 countries combined. So its GDP is just huge. So first of all, and also remember the US dollar is in commodities, it's in equities, it's in currencies, it's everywhere. So we want to know, what is the state of the US dollar? And so we usually can, if it's sitting in here, we would use the dollar index, if we can go do that, if the symbol exists. So we go up here and just type in DXY. Let's see if that brings anything up. Yes, it does. The only thing is it's a futures contract, so sometimes that can means that you don't get a lot of data with it. But we're going to start with that and see what it looks like. Let's go see. So let's start with the dollar index, and you can see here it's a daily chart. We don't have a lot of data with it. So you can see that there's currently a bit of a downtrend at the moment of lower highs, lower lows. So we have had a weakening dollar lately. We know this to be the case. And the only question now is that potentially going to continue onwards. So the next best one to have a look at is usually the euro against the US dollar. It's not a complete inverse correlation, but it's a pretty good example of the state of the US dollar at the moment. Okay, and so we let's have a look at it. So currently we've got the euro dollar climbing to the upside. You'll see it pulls back. We've got the 50, 20, and 10 simple moving averages here. 50, 20, and 10, and price is trending higher. So it's come back, it pulls back, produces a green candle, breaks higher, produces a green candle, breaks higher. It's trying to produce a green candle at the moment. It's trying to maintain this trend. So to get a bigger picture, I want to have a look at what's going on. I'm going to go as far as the monthly. And this is important because here it gives me some very important context. There's a couple of major levels that I want to be paying attention to. And so something that I would remind you of as well is that before we even had charts, if you go back to the markets, 100 years ago, for example, you had traders in the pits. There's always an underlying market. So traders would start off trading commodities, orange juice, gold, coffee, and every day they would update the price like once or twice a day, and they would update it on a board. There was no such thing as a chart. So it was really only in the kind of 50s, 60s, 70s where charts analysis kind of came about. And so you must understand that really everything ultimately comes about the market moving from price levels to price levels, okay? And so what we do with technical analysis is we identify where these key price levels are, and the logic is, it's very simple. The logic is that if you break through this level, then the path of least resistance means that it's most likely, it's not guaranteed, but it's most likely going to head up to that next level. So that's the broad picture. That's what we do as traders. And so currently we can see that it had a big move to the downside without any real retracements. Normally you get a move, pull back, move, pull back. We had none of that. So it was very overdue, came down to a major level, and it's pulled back up into, I would say that it has sufficiently kind of broken above this level that it's probably, or it has a good chance of heading back up to these levels here. So it should be able to continue back up to that. If you use Fibonacci, you can also look at Fibonacci levels. Is it coming back to 618 or coming back to 50 fib? Those kind of things are normal to do in situations like this. Okay, so we start really with identifying the bigger picture. Where are we within that? If we look at the weekly, we've also had a really big move to the upside here. You can see here it was a move, pull back, so very steady trend. We've broken these previous highs, so this is very important. How the way that the trends work is very simple. If we go from an uptrend, we produce a series of higher lows. When we break that and then produce a lower high, lower low, so we have a high, a low, a lower high, a lower low, then we have a downtrend. So crucial components of that is breaking a previous low and producing a lower high and producing a lower low. So you need all those things to happen to have a confirmed change in trend. what we've got here, we've broken in this coming down. So we've got a similar thing happening here. We have to kind of break various things. We've got to break these previous highs. We've got to produce higher lows. We've got to break above that. Those are things that have to happen. If you look at it here, we've broken the previous highs coming up. We've broken this one as well. In fact, we've almost even broken this one. We've definitely broken enough of those. What we haven't really done to my satisfaction is produced a higher low, which could happen any number of ways. We haven't really done that yet. And so at some point, we're going to have a bit of a correction to the downside if we're going to continue up. So I just want to kind of highlight that maybe what's going to happen is the market's just going to keep pushing, get to this level, and then it's going to come down. There's any number of one of those things. But what we can tell so far is that the market is generally between these two levels. It has a fair shot. There's a little bit of local resistance here. So if you look here, the market is particularly sensitive to areas where prices tested it from above as well as from below. So that's a good value. And so there's a very good chance the market is probably going to work its way up to here at some point, but it also needs to do that if we're going to see a longer term shift. So that is something that is almost certainly going to play out over the next 1 or 2 weeks. That's my general approach to that, is for the most part, I'm looking to see what happens. As soon as I start to see more red candles coming in here, then I'm expecting it to come back down. Something is due for it to kind of have to happen. We've got to look at it from a daily perspective. We can actually see, for the most part, this doesn't look that bad. How do we use these? How do we use these two indicators, so the MACD and RSI? We could use stochastics, we could use CCI, we could use a number of different things. But these two are just pretty much proven, very reliable indicators. We use the two of them for the same thing. So what I'm trying to get you, ladies and gents, is a double confirmation. And it's very straightforward. We don't use oversold or overbought. We're not worried about that at all, really. A very reliable, very accurate way is to determine very simply the momentum. So what I'm looking for here is that if my price is trending higher and my indicator is trending higher, both indicators are trending higher, the trend is strong and healthy. Okay, that means that there shouldn't be any change in trend. It doesn't mean you won't have retracements, but it means that if you get a buy opportunity, the trends, the momentum of the trend is strong and healthy, and therefore the trend is not showing any signs of changing anytime soon. So you can look for pullbacks and continue looking for buying as long as the indicators are trending higher. So what we actually have in this particular case is we've got the MACD is flat and RSI is flat. That in itself, by the way, is still not bad. Okay, it just means it's consolidating. It's not a bad thing. It would be bad if we had this, if we had the MACD trending down, RSI trending down, and price going up. That would imply that this is going to either go into consolidation or a change of trend, but not a guaranteed change of trend. So when we see this happening, ladies and gentlemen, just jumping ahead here, this is never ever a signal to start selling. You can only sell when you have a change of trend in price action. So let me slow down and repeat that. You must always have price action, must always confirm before you take action. You never go on a signal until price action has formed. So if these are looking bearish, then price action has to turn bearish before you can follow through on it. And if you ignore that, you'll bleed money. But if you can stick to that, waiting for price action to confirm it, your entries will be as good as they can be anyway. So you're not missing out on anything, and you'll make more money and lose less. So that's looking good. So currently we do have a bit of an uptrend. That's not so bad. Let's compare that to the pound. So here we've got the pound has pulled back to a previous low. That's not necessarily a bad thing. You can get, this is a very, I'm going to give you a tip that you may never ever realize how good it is, but some of the most simple patterns are the most powerful. So you get a head and shoulders pattern. That's a change of trend. It's a very good one. You get an inverted head and shoulders upside down. So that's also very good. You get a double bottom. So price will double bottom. Off that, you can get a double top. These are very simple patterns and they work incredibly well. And most of them are usually just a change of trend, but we've given that shape a nickname. You can get an ascending triangle, so you can get that, so it breaks out there. You can get a descending triangle, so it comes down like this onto a flat level. You can get a number of those things, and they work incredibly well. I think head and shoulders is one of the most powerful ones around. Double bottoms, double tops all work very well. So what you could get in a situation like this, which is very powerful because that's our resistance, that could be potential support, and it's a potential, is you could get a double bottom. So why is this powerful? Because a double bottom within an uptrend is a powerful signal. Okay, it's a very powerful signal. Give me 1 second, please. I'm quite thirsty. I want to quickly just request a drink from the wife because I'm in the office and I want her to bring that to me. So now what was I going to say here? So this double bottom within an uptrend is a potential buy signal. So we could be looking, if I get that. So what would I have to see? I'd have to see something similar to this. So something similar to that, I'd have to see a nice green bullish candle, and then I'd look to put my entry above the high, stop loss below the low, and then generally looking to target 3 to 1. Generally speaking, that is the most sensible approach, and taking some profit at 1 to 1. It's very straightforward. Well, I make it sound very straightforward, but I'm here to tell you that after all the years of most traders going all over the place, eventually we tend to settle on really straightforward, simple things. When we're not trying to, when people aren't trying to sell you stuff. If it's about real world trading, it's usually just it's about simple stuff, doing it really well. So doesn't it look more like the beginning of a head and shoulders? Fantastic question. Okay. So in other words, the question is, could we be seeing, could this be the first shoulder and the head, and then we would get this? I would say you could get a double bottom. This kind of, so let me finish. These are two separate things because that is a great question. You can get double bottoms that do this. So that is a reality, as opposed to, I wouldn't want to jump ahead and say this is definitely going to be head and shoulders. But how would you know when it is? You would know when you get a lower high and a pullback to this range. So you would know that. So in those, but double bottoms within a trend are also very, very powerful. Okay, so here was a double top within a downtrend. So very powerful, they happen. I don't want you to, that's a massively powerful piece of information I've given you about a trading strategy that is worth its fortune in, I would say Tesla stock, but not these days, but it's worth its weight in gold. So I don't want you to bin it because you're going to think every double bottom or double top could be ahead, the formula head and shoulders. But that is a valid question. And unfortunately, what I would rather do, see if we get that signal. And if not, and also part of the reason we sometimes try to take some partial profits is in case it fails and starts coming back down. Yes, there is a very real possibility this could turn into a head and shoulders, but I have different reasons for thinking that. Also, price could fall below here. So if price falls below here, then that whole idea is negated. So you have to see a setup like this. Excuse me. Here we've got RSI is good. MACD is a little bit funny here. You don't have to obsess about, oh, well, there's a little bit of that. You don't have to worry about that. The general thing is, honestly, if the MACD was actively moving down and obviously moving down, you've got a problem. It's when it's subtle, you don't have to stress about it too much. Let's look at Aussie dollar. So we look at everything against the US dollar here. We want to see what's going to happen. And again, we pull back here. So this one is a little bit different because when you look, it had a big move. Now then it double topped, came back, broke through just a little bit, pulled back, tried again, stumbled, tried again, and has been kicked back. So the collective story to me here is that this is battling. And if that's what if you're getting that impression as well, you are right. And on top of that, if you now look, you can see the MACD is definitely starting to head lower, and this one is absolutely heading lower. You can see it's starting to trend lower. So Aussie dollar is not as strong, and it is definitely battling, but it hasn't changed trend yet. So in order for it to change trend, I'd have to break through, come back, and start heading down. It could find resistance there. I'd have to see that happen. So Aussie dollar is not as strong as the rest, and it's definitely looking problematic. Kiwi dollar also coming back down towards the lows. They've had a really good run, and it's very possible they're just overdue for a pullback. I mean, a big move down, big move up. This, by the way, is a very interesting type of move. It's a solid move down. It's immediately recovered the same amounts, but it's battling here as well. So I think it's overdue. It could come back down to these levels here. It could come back down to here, and then it's going to have to make a decision if it's going to continue up to those parts. Okay, that's what we're looking at. And so this is kind of where we are at the moment. There's a lot of these that are stumbling a bit with those issues. I wouldn't necessarily write them off. It's very possible either of these areas are valid areas. Also, I was going to say that, listen, the thing of drawing in support resistance levels is a lifelong thing that you never quite get to a point where it's perfect. There's just times when you're like, okay, I nailed it. But it's always a refining process. And if you get stuck, you go up the higher time frames. You start looking here. So it should always, if you get really stuck with it, go up and then try to match things there. That's really the best way to do it. And it must be whatever touches the edges, whether it's the body or whether it's the wick, but you should always connect as many dots as possible. And if it is the body of one and the wick of another, then so be it. Over here, you can see there's a wick and a wick and a wick, and like it varies. And there's the body, there's the body. That's fine. Okay, it's perfectly acceptable. Okay, so my point here is we've had a big move up. We're overextended to the upside. We've got a bit of an exhaustion. These are indecision candles. The implication here, guys, is that if we break these lows, we're going to come back down. The question is, how far are we going to come back down? We're going to come back down to this level or back down to this level. And I think there's a strong possibility that's going to happen this week. Let's go to dollar yen. I want to kind of speed this up a little bit because I want to talk about other stuff. And okay, my message obviously hasn't got through. Okay, so question: do you trade daily looking at weekly and daily charts? If yes, on what time frame do you enter your trade? Oh, it's lovely. I love these questions. I like to have a sense of what's going on with the weekly and the daily. I do, because just generally I find that that gives me a picture in my head. So here's something that happens over time as you have traded for longer. You probably spend your first year or two skilling up. In other words, you're constantly learning new stuff. I don't think you need to know everything. I think it's possible that if you went and worked under one trader, and they gave you a broad base and then gave you specifics, and that's all you did, you basically just start building experience from there. But you wouldn't, because what happens, a lot of people they want to understand how to use Bollinger Bands, and then they spend 6 months using that, and so they waste a lot of time learning stuff only to eliminate it. So I just wanted to explain why I use the daily and the weekly to give me a broad sense of where everything is. And because I'm not upskilling as much now, my brain can retain that. So my brain isn't working that hard anymore. So I can, in my head, I know where the dollar yen is at, whereas you guys can't be expected to remember that because your brain is still trying to figure other stuff out. But I have snapshots of where the markets are generally. And I have that because there's nothing else occupying it. Everything else has become muscle memory. And to answer your specific question of what time I enter, what time frame. So the first thing is I look at the 4 hour. The 4 hour tells me the trend direction. So I'm looking for markets that are trending up or trending down. I'm not interested in markets that are giving mixed signals. So this one is very messy. Principally, I'm not really too concerned with that. Okay, I could trade it, but it's not the best one. I'm looking for stuff. So the 4 hour will give me direction. That's which way I'm looking for stuff. And my entry is on the 15 minutes. Now, I can get in on the 5 minute, but the 15 minute works very well. Okay, so the 15 minutes is my preferred entry time frame, but the 4 hour gives me a really good direction. Why is that? Well, because generally speaking, I am looking for 1 4 hour. If I can get in on the 15 minutes and I can hit my 3-to-1 target within 5 or 6 candles, for example, that might actually happen within a 4 hour, the next 4 hour candle. So that's all I'm really looking for, is that 4 hour to give me a sense of direction, the next 4 hour candle to follow through on that, and I will get in inside that candle on the 15 minute time frame. I hope that makes sense to you. I'll be looking for that entry. Okay, so let's run through. These are great questions. So we were looking at dollar yen. Okay, so dollar yen has had a big correction. Now I needed that because it was very overextended. So one of the things I'd like you to observe here is we've got the 50, the 20, and the 10, and you'll see how price often, when it's trending, comes back to the 10 and 20 together, comes back to that area, comes back and heads off, comes back and heads off. And so this is where the market has come back to. It's come back to the 10. To me, this is, if this trend is going to be, you know, it's been around for a year and it was overdue for a correction. If in the future, I can't tell that yet, but if in the future this is going to carry on, in other words, we haven't seen the end of it, this is the earliest point at which I could expect it to turn around. And that would be really bullish. In my mind, I don't think the dangers or the things that caused what we're going at are still a problem. They could be, okay? So I'm not trying, guys, we're not trying to predict 6 months from now. We're just looking at a plan for the next 2 or 3 weeks. So we're just looking at what is the monthly momentum looking like, where it's going just for the next candle, where the weekly candles look like they're going to go. And then we'll look at the daily. So that gives me a general feeling, and then I can, during the day, during the week, because remember, I can do an analysis now that should hold up for a couple of weeks. Then, you know, on any given day, I roughly know what my bigger plan is. By the way, I'll give you a tip. You will do some of your absolute best analysis on the days when the markets are closed. So if you do your analysis on the days when the markets are closed, you don't have that feeling that you're missing out on a trade somewhere or the market's moving. You will find that your brain is very calm and not distracted, and you will do your best, most objective analysis. There's a very, very good book. I think it's called The Disorganized Mind, not The Organized Mind. I think it's called The Disorganized Mind. No, it's called The Organized Mind. I beg your pardon. It's called The Organized Mind, and it's phenomenal. It's very long. I did it as an audiobook. I can't be bothered with stuff that like is very intense to read because I've got so much stuff that I'm reading and learning. And it talks about how our brain thinks and gets distracted. There's stuff in there that will teach you about our behavior and why we chase markets, because they don't talk about, they just talk about how we're built as animals and why we chase things that move. But you'll be able to relay it back to your trading. You'll be like, oh, that's why I do that, because of how the brain is organized, how it organizes data, how it sees things, how it draws conclusions. It has all these different things that it does. So yeah. Anyway, so this could be a pullback. Normally, I would expect it to pull back further. I would normally expect it to come back here. So I do think that it is not completely, look, Russia's invasion has calmed down, meaning it now appears, again, look, things can change. I'm not trying to say it's fixed, but I'm saying it feels as though inflation is starting to slow down a bit. It doesn't feel as though the markets are as scared as they were 6 months ago. It feels we've got other stuff we have to maybe worry about, maybe a recession or a few other things we have to kind of be a bit cautious about. But it also doesn't necessarily feel all a doom and gloom, I don't think. Anyway, anecdotally, it doesn't seem so bad. So to me, at this point in time, I think that it's fair. The markets might basically want to come back down and calm down a little bit. Possibly, we'll see. We'll actually have to see how this week goes. But if something changes, if there's something we don't know about and inflation is still spiraling out of control and the Russia war escalates into something else, then maybe that's what's going to be the case. But I'm just not getting that sense at this time. Therefore, I think it's fair to say we might see that market still head a little bit further down. And this week we've got BOJ news, Bank of Japan. So a clue for that, sorry, a clue on that would be a break below here. So if we end up having a break below this, back down towards these levels. Okay, thank you very much. Oh, perfect, thank you. We would see the market start to come back down towards these sort of lows down here. And that would be good. That would be more in line with what we see. And why does that matter? How does that matter for day trading? So this is how it goes for day trading. If it starts to look more like the market is going to come back down to about these levels, then that actually means I've got potential opportunities all the way down there. And if the market breaks through here, then there's a very real possibility that we could see some moves as it drops down towards those levels. And so all of a sudden I've got a bit of a game plan that actually, wow, if that's going to be the case, I can start looking for trading opportunities. And again, if I get double tops and moves, break below lows, very simple, straightforward stuff. That's how we kind of do that. Okay, so I also just keep an eye on the time. And so far, I just wanted to draw your attention to dollar yen, because although it's at the old lows here and it could find support and go back up, it's also at a good point where we could head a bit lower. And I think that it's not unreasonable to think that if the world is calming down a bit, we might see it head a bit lower. Now, let's go ahead and have a look at a few other things. I'm going to walk away from those for a little bit. Let's go look at some commodities. Let's look at gold. Do you guys want me to just stick to currencies? Because I know in the agenda it said just Forex. Do you want me to do that, or would you like me to have a look at other things? Whatever you tell me to do, I will do. I just thought you might want to get a sense of other things going on in the markets. Okay, so you tell me, and then I'll have a look at those things. Okay. Okay, cool. So we'll look at gold and oil and the indices as well. Let's have a look at that. Okay, so the reason I want to do a little bit of everything is because I think stuff's going to happen this week in the markets you want to be aware of. And also you might have opportunities that aren't just in currencies. So let's get a big picture sense of what's happened with gold. First of all, these are the major levels. There's one there as well. A couple of things I want to say about the idea of gold. There's a major level here. Let's go with that. And then let's go with, there's something here. Okay, there's definitely something. And then let's kind of push it up there for now. For now, let's go with that. So what did I want to say about this? Okay. When I was learning how to trade, which was around about kind of coming in, I was sort of entering into the markets probably around 2009, probably in this area. Gold was just very steady. And I remember during this period, it went completely out of whack. It was actually very much, it felt in the media and on social media, it felt very much like, I've seen your request, by the way, for Poundcat. I will do that, Leon, thanks. It felt the same as a crypto bubble. It was like everyone was buying it. There were PDFs flying around because that was kind of what happened then. Everyone was like, you have to buy, you have to hoard. It's never coming back down. It's never ever doing that. It peaked and then it started to break through these lows and then it came down and it didn't get back up above those levels. And this is crucial. That was a time when the whole world, not the whole world, but the whole internet thought that it was never coming back down, and it did. And it stayed down from 2013 till 2019. And then it finally broke out, went straight up to sort of all-time highs, broke through $2,000, tried again and came back down, broke through these lows. Now it's kind of back up above that. So let's go back into this. This is a very nice bullish candle. This is a nice little correction. So in other words, it had a big move up, stumbled for a bit, tried again, and then had a bit of a correction. And this is a very nice bullish candle. So that's not a sign of weakness. That's pretty good. We've kind of broken through this little bit of a level. That's where we are now. We're battling, bumping our head here. But it's also very fair to say that if we break above this, we're probably going to continue back up towards 1900. That's a very fair kind of assessment. However, one of the other things that we do need to do is we need to potentially come back down to test this. So it's not inconceivable. We'll go down to the lower timeframes. We could have something like that also happen if that's going to be the case. So let's go again to that weekly time frame. Let's get a sense of that. So here is kind of what happened. This is beautiful. We had a downtrend, which then came to a triple bottom. It actually touched there, and then it came back and did that. Looks really good. But at some point, we could potentially, I'm drawing it badly now, we could have price come back down to here, carry on, or potentially even back down there and carry on. So you get your inverse head and shoulders kind of pattern, all those little things. Don't worry if you don't see these things, if they don't jump out at you. They will when you haven't got so much other stuff going on. As time goes by, it's like learning how to drive a car. In the beginning, you're just so intense by changing gears, indicators. Unless you're a BMW driver, I'm kidding. I've owned a BMW before, but we're so distracted by all that stuff in the traffic. And after a while, after you've been driving for several years, it's all completely unconscious. You can sort of zone out and drive and still be, paying attention in your own way. So anyway, it happens. So I just highlighted as well, we've come up to the 50-period moving average. We're also producing those stalling signals. And we could find this week, if we break the low here, we could find that we have a correction down. So I don't want to project that and say, look, that means we're definitely going down here. You don't do that. You don't try to project long-term. Just rather think, okay, if we break through here, we'll come back down to here. And if you do that, you will tend to trade better because you're not trying to overlay a bigger picture stuff and trying to force what happens through into that. Rather just deal with stuff on the fly as it happens, so that if it changes, you are changing with it. You're like, okay, we've got to the level, now what? So this kind of thing would take 1 or 2 weeks. We could find that's the case potentially. So that would probably see us through till first week of January. I want to see if that's going to be the case. And on my daily, that actually means that you can see it stumbling here a bit. That's also got a bit flat. That's starting to trend down, run down a little bit. So probably once we break through these lows, the first target will see us, if it's mild, it will just come back down to these old highs. But there's a very high probability we'll sort of more likely head down towards these levels down here, okay, this area. Almost maybe to the 50. Notice how here we come up to the 50, we bump the red 50 moving average. We come back here to the 50, come back there to the 50, back here to the 50. Now we're above the 50, so maybe we need to come back down to the 50 and then bounce off it. So we're on the other side of it. Let's see how that's going to go. So that's very much what I'm looking for this week, is to see if we have a bit of a break on that. And so silver has also been incredibly bullish. It has been, in fact, it's rare. Normally gold is driving the moves and silver is a bit sort of half in, half out. But just recently, silver has been moving. couple of things I want to highlight here. So we have an uptrend. We produced a very nice, happy, healthy, bullish signal, and we broke the high. So if I didn't place a trade because my weekly analysis said to me to expect some failures, which is all explained if you really, really want to know and you don't already know about it. I have a YouTube channel. It's free. It's all the same analysis. It's the same thing we're doing now, and I do a weekly analysis. So if you find it, I explain why I'm expecting a drop across the board. Now, if you're looking for more explanation on that. So, but that was actually traditionally, that would be a really good signal. And one of the things I want to show you as well is the MACD looks really healthy here. Not so much the RSI. That looks like it's kind of starting to turn down a bit. The MACD looks really healthy. And so I was expecting if anything was going to maintain its trend, I actually thought silver would. So silver might just come back down to here and find a base over the next week and then carry on up. Then let's go back to pound CAD because you had a request for pound CAD. And there we go. So the only other thing I would add about pound CAD is when you look at it from a weekly perspective, it has been bulleting for a while. We've got a bit of a red candle here, and if we break the low, we're gonna have a bit of a swing high. So is it overextended? Yes, it's had a big move up here and then a big move up here. In about 10 candles, maybe 12 candles, it's done what it took like 30 candles to do. Almost, you know what I mean, like twice the number of candles to do. So it's run hot and heavy. It needs to potentially come back down, and if it does come back down, I think, you know, could be back down to here. Even it could potentially do that if that's going to be the case. This kind of a move with some of the other CAD pairs. So let's just show you some of the other CAD pairs, so you know it's not just the pound. That was actually the CAD pairs have been doing that. That just means that it was probably fundamentals that have been driving that like crazy, and they've had a big move up into these areas and now finally run into that area of resistance. So move down here could be on the cards. And so what I'm looking for there, although we've pulled back, we've already started to fail. And that weekly gives me some perspective. So what I'm more sort of starting to expect here is to start to see some moves back down to maybe here over the coming week. So I've mapped out the distance, so I know roughly how far it could potentially come back down, anywhere down to there. And if I go to the 4 hour, I'm looking for that to start to shift. So what happens is in a section like this, you've got lots of buyers, not so many sellers. And in this area here, there's a bit of a shift. There's buyers trying to get in here because they think it's done a daily retracement, it's ready to go. And you've got some sellers and some other buyers getting out. So there's a shift from lots of buyers to some buyers, some sellers, and then it's going to start to pick up momentum. It's going to shift more to more sellers. It's just the normal evolution of as a trend is born and then starts to mature. So what I'm looking for here, guys, would be a break and a retest and a continuation. That would be the beginning of it. And you can see there's some other smaller levels here that the market will work its way down to, but this would absolutely qualify on my watch list if we break through here. What would I need to see to think it's going to be bullish? I need to see it break back up above here. It would have to go back up so that it's going to do that. So it's a little bit range bound at the moment, but that's why I think, and also look at this, just trending down, look at that. So you can see here, it's been trending down while it's been running up. It's very tired and exhausted. It hasn't shifted, to my mind, into a proper, nice, happy, healthy downtrend yet. So I need that confirmation of price to do that. Okay, that's what I'm looking for. And actually, we'll see how tomorrow goes, because it's looking potentially like that's going to be the case. So that's just that YouTube channel name is anything. You can look up any of that, or you can look up London City Trader. It's probably the best. London City Trader, just look that up. And there's a weekly analysis in there. So that'll give you a really good sense of kind of how I do it. Okay, now, okay, so now that's pound CAD. So let's just continue on. Let's go look at oil. So if we get a sense of what's happening with oil, oil's come back down to these old highs. Let's clean this up a little bit. Come back to these old highs, a little bit of a level down here as well. And it's looking, it's still in a downtrend here on the weekly. It's producing, you can see here, there's again a double top, came back down to this level. And I think it's fair. There was a little bit of a support level over here. We broke through. And so far, generally speaking, the MACD is still trending lower. There's no real change in this. That's still looking a little bit bearish. I think it's slowing down, but I think there's a fair possibility it might still hit a little bit lower this week. So that's, I'm still bearish on that for the time being. I want to see how it reacts at this level here. It did break through a major level of support, nice solid break. So I want to see if it continues down to those levels, but in this area. So still a little bit more room for that to move. Then if we go across and have a look at the major global indices, let's have a look at the Dow. So you can see here again, the monthly, let's get some good perspective on this. Yeah, there we go. We've had a big drop down, very nice strong bullish bar. That's very bullish as well. But we have the same problem. We've had a very strong move without any kind of a proper correction. I mean, we need to have that. So if we sort of, I'm going to zoom out here a little bit. But again, in the past, you'll see we have a really big move up, and at some point we have to have a bit of a move down. Here we actually had a couple before we finally picked up again. Here that moved, we need to come back down. So the question is, are we going to find support where we are here, or are we going to go down a little bit further? So this is something that I'm looking for at the moment. Are we going to have that? And so and again, this is sort of real world technical analysis, meaning these are the kind of, there are times when the market's direction is much clearer, and there are times when the market's decision can be a bit mixed. So you can see what it's signaling. But let me give an example. When you look at this candle here, how would you describe that? Would you describe that as bullish or bearish? Let me do a quick survey. You guys tell me. Would you describe that as bullish or bearish before I give you my point of view? Yeah, it's not a trap. It's bearish. And it's not just that it's bearish, it's engulfing. So the top of this is here, the bottom of this is here. It's so bearish that it's wiped out the last 4 or 5 weeks of moves. Okay, and it closed near the lows. So that's a very significant signal. And it didn't just do that for the Dow. It did it for the S&P, and it did it for the tech. It did that as well. Very bearish engulfing candle. So bearish across the board. And so usually the expectation would be, when you see a very bearish candle like that, like you do here, you would expect the next candle, the next week, to head lower. So that's why the problem is that it's come back down to the level of support, and that in itself is not my problem. I was expecting price to do this potentially, but this candle is very bearish. So that means that the probabilities are the market probably wants to do one more move down. Okay, that's what that particular signal candle means. But if we hadn't got that candle, if we just got another little red candle, I'd be looking for price to move up from here. So it's a conflict. This candle says very strong rejection up here, very bearish close near the lows. It implies there's a move down. But if that hadn't happened, I would expect it to move up here. That's what I was expecting to move down. You can see it in the weekly videos, but now it's back up here. So it's a bit of a dilemma. So here's the thing. I'm prepared this week for the markets to move down to the next level, follow through on that, and then we'll see if they can recover and turn around. However, should the markets this week ignore this and come back up, to me, that would be an incredibly bullish signal. In other words, the market just got punched in the gut and just picked itself right back up and continued up. So if we get a bullish candle this week, that would be, to me, a very encouraging sign. Okay, a very weak bearish market should just keep going. It should get knocked down. It's had a very big knock. It should just keep going like this. It should just go down. So if it doesn't, I would say that's the market's maybe not as weak as people think it is. And again, as you get that shift from here, you've got a lot of sellers in the market. As it's trying to turn around, you have sellers coming back in because they think that they're still under the pressure that's a double top. They think, okay, we'll get knocked back down. So and it's only when you start to break back through that then the sellers become buyers, and then the momentum starts to shift to the upside. So I just wanted to talk you through this because this is a rare situation. It's a real dilemma. We need to see what's going to happen. It's the same on the S&P. And here again, let me argue this point. Here, generally, when we're above the red 50-period moving average, we're bullish. Here, we came underneath it, got knocked back down. We've come back underneath it and got knocked back down again. So one of the things that could happen, and again, let's not project 6 months into the future. Let's just take it a week at a time. There is another level down here, and there's a potential another level down here. And again, we could do this. So we could get, again, a bit of an inverted head and shoulders as we go from a bear market back up into a bull market. So let's not assume, and one of the things that we also have here is bullish divergence here as well. We've got bullish divergence on both of these. So these have started to trend upwards. They're bullish. These have started to trend upwards. So it implies the market is trying to turn around, and therefore I don't at this time want to presume that we're just going to keep going. That's not what we do as a trader. As a trader, I'm only thinking about this coming week, this week, like the next few days. And so this is what my trading plan is for now. So then when you go to the daily, you get those levels. Okay, so this is where I think that market could work its way back down to, more down to about there, because that seems to line up a little bit better. Possibly a little bit further, we could have something maybe down to about here. We'll deal with that in the meantime. I mean, if I really want to get a little bit messy, then maybe up sort of here somewhere. And I say that because of this. There, maybe there's a little bit there, a little bit there. So then I got onto that 4 hourly, and here you can see the downtrend. So we had a potential setup that took off today. I'm going to be looking for pullbacks as well, 1 hour as well. So what I'm looking for this over the next few weeks will be, moves from here, pullbacks on that 4 hour and 1 hour. Just to get a general sense of that. So someone saying to me, well, how are you getting in on the 15 minutes if you're watching the 1 hour and 4 hour? You could do that, but in situations like this, if the market's heading down, then I can get onto that 15 minutes. The problem is the 15 minutes is overextended away from the moving averages. It'd be a really great place for me to sell would be here. So you can see it's a little bit of a level. If price could come back to here, then I'd be willing to sell. You should always be selling from a level or buying from a level. Okay, so that is what I'm looking for. It's just that would be something. And so that would be my entry on the 15 minutes. So what kind of entry? Well, usually putting my stop loss behind these core points. You've got these core points, and then usually looking for an entry through. So this is quite interesting. You get these beautiful breakthrough candles that break through these key levels. You can put your sell order there, stop loss above that, target 3 to 1. Or if you get a pullback and you get a candle that looks like this is a great little candle there. Nice little rejection candle there. Entry and stop loss 3 to 1. That's you could target further if you think that the next level is further away, but you never want to assume it's just going to go to that level. You want to be taking profits as you go. And I will say from experience, it's very dangerous to take what I've done and extrapolate it into, oh my God, we're still in a bear market, it's still going to go. It doesn't do that, because what happens in that situation is you're still selling when the market is now returning to a bear market. When it starts returning to a bull market, you're still convinced it's going to keep falling, and people lose more money trying to short a bull market than they think they're going to. They think when it's a bear market, they're going to coin it. And you can make money while it's doing that, but you've got to understand that these markets are made up of, in general, are made up of pedigree companies, and people want to invest in mutual funds and pensions, invest in them. So there's more people that think stock markets are going to climb historically than they're going to fall. So statistically, you're safer being bullish on the markets than being bearish. And if you are bearish, it should be with caution. So anyway, just showing you this as a sensible approach. So let's go and have a look at some of the other markets here as well. Let's go back to this. We've got 5 minutes, and I want to do a few more currencies, but I want to show you a few things here. So look at the FTSE, look at the UK. So the UK is interesting because we recovered really well, went up to the highs. Here we're coming back down. We got back over this side of the 50-period moving average, but now we've got to decide what we're going to do. We're range bound. So This is a little bit more tricky. I prefer the US markets or the DAX because the FTSE is very choppy. The DAX over here as well. Let's have a look at this. Go to the weekly. So here it makes sense. All the way up into this level, and then it's come back down. It's on this side of the 50. Is it going to find support in this area? Is it going to come back down to here? But this is what I'd like to see this week. If we could get a nice bullish weekly candle, to me, this week, that would mean we're probably going to start going higher. So how the weekly candle ends can also change your trading for the next week. You can go, okay, we hit it down this week, and then we finished higher. So next week, we're probably going to go higher, that kind of thing. Let's look at the ASX out of Australia. Come on. There's a double bottom. Look how nice that is. Just beautiful change in trend. Very nice. Coming back down, you can see how there's a level of support here, coming back down to test it. Also bearish candle. So most of the markets seem to want to push lower, but they might break and then find support and turn around. So I'm just cautiously bearish, but definitely cautiously bearish as opposed to bullish. Let's have a very quick look at a few other things. If equities are under fire, cryptos are absolutely going to take a hit, okay, because they're very much integrated. Most people don't get that. But again, Bitcoin and a lot of cryptos are priced against the dollar, and that dollar is moving between everything, golds, oil, equities, currencies. So cryptos are integrated very much into the rest of the market. So if you're a fan of only cryptos, you need to be looking at other stuff as well to see that. Because then people think cryptos are crashing when actually everything is crashing. It isn't just cryptos. So tech stocks, for example, if we look at tech stocks, we can see here, if we look at it from a monthly perspective, we've had a big correction, bit of a bearish candle at the moment. I want to see what happens here. We could have a nice little double bottom. We have started to trend a little bit higher here. We are starting to slow down, and I want to see what happens with that. Apple's one I'm pretty interested in because it appears as though Apple might be forming a bit of a bearish breakout pattern here. I was talking to you about a descending triangle, so a bit of a bearish breakout pattern. And if it is going to break through here, it could find itself moving down to the next sort of level. So that's something that I'm curious to see what happens with that. So I pay attention because there could be, excuse me, another big break. Down towards those levels. And so that's Apple. Microsoft, let's get some big picture stuff on these. What's going on with them? See, it's pulled back into level of support, produced a bearish rejection candle. There's a lot of signals here that show that the markets are going to maybe test lower again. Google, let's just jump in and see a few of these things. Walmart, Walmart and Costco, these are the ones that are generally very, very powerful and strong and stable. They're coming back in here because when people are tight on cash or cutting down on costs, they will spend their money at Costco and Walmart instead. So that could also be a bit of a bearish breakout to the downside. Lower highs coming into a flat level. Last chance to turn around is this week because then we need to break up and break those highs if that's going to be the case. And then the other one I want to have a look at, some of you might be interested, is just have a look at Tesla. Tesla's just breaking down through some of these lows here. We'll see how it goes. It's at 149 at the moment. We'll see what's going to happen with that. So you could trade stocks. I think it gets my bit of advice, not financial advice, just trading advice, is I would either trade just equities because there's so many of them. It's a lot to focus on. And then I would ignore the rest. Or if you're doing currencies, you could do commodities and indices. So you could do all of these because it's about 35 charts to work your way through. But if you're going to focus on equities and that, it's a lot. Then all of a sudden you've got so many charts to follow each day, it gets a bit distracting. For day trading purposes, that is. And so let's just go back, a very quick run through of these because I know we've got 1 minute to go. Just want to have a look at some of these trends. You can see, for example, Aussie Kiwi, some of the Aussie pairs. So what I often do is I'll look at all the GBP pairs in a row. So I'll look at GBP dollar, and my question is, you can look at the weekly because if you're gonna, the weekly will give you a good sense of where the next week is likely to go, even if you're trading the 15 minutes. Gives you, it's not about time, it's about distance. From there down to there is not that far. It's 100 and something pips, 200 pips. So it gives you a good sense of direction more than distance per se. So if I look at all the GBP pairs, we're overextended, potential bearish move, we might be hitting lower. So let's look at the other GBP pairs, Pound Aussie, to give me a sense of how the GBP pairs are doing. So this one is trying to trade up a little bit higher. Some resistance there, not a lot of direction. Pound yen, very messy. So not liking the look of that. Pound Swissy. This one is also a bit rangy at the moment. Pound CAD looks a lot like GBP. It's overextended, potential correction down. So the ones that I like are the ones where they're the most, they've overstretched and they need to come back, because on the weekly, when this comes back down, it could take 2 or 3 weeks. And so for 2 or 3 weeks, there could be downtrends back down to these levels. And so that, consider my watch list, because that's where I can find trading opportunities. When you look at something like Pound Swissy, there aren't any really big moves that it looks like it's going to do. It has to break out of there to move to there. It gets a little bit trickier. And so the pound pair is also giving very different signals. Sometimes it looks bullish, then it looks mixed. I want to see something where, for example, it's clearly doing one thing. So Aussie dollar's heading, Aussie Kiwi's heading lower. Aussie Swissy is looking quite bearish here as well, if it breaks through there. Aussie CAD is not looking as bullish as pound CAD. It's a little bit overextended. Aussie yen is looking, that looks like a bit of a head and shoulders pattern, guys. So a break down there would be potentially a nice move down to about here. So that's, you know, and it's looking quite weak. So Aussie pairs are generally looking quite weak. And so that's how I like to run through them. I look at all the euro pairs, all the Aussie pairs, then I look at all the pound yen, euro yen. So I look at all the yen pairs, and I try to get a sense of, are they all looking bullish, bearish, or are they mixed? And you'd be amazed, by a process of elimination, you can work your way to finding a nice trading list, and then those levels, identify those key levels. The time's gone by so quickly. So I just wanted to say thank you very, very much. It has gone by so quickly, and it's always too quick for me at any rate. But I was going to say on this one, in case I don't see you before we break for the holidays, I want to wish you obviously a fantastic thanks Leon. I appreciate that feedback. Yeah, thanks I hope you enjoyed them. They're watching those the content. So I was going to say, look, if I don't see you before then, please, I want to wish you a wonderful holiday and a break from everything, get some rest. If I am doing something, I might post it on the YouTube channel. It's not to steer you away from here at all. It's just that I'm not, not booked for any webinars here, so I might just post up there if I see anything nice, and that's it. If you do have any issues to do with your account or to do with the platform, please don't hesitate to get in touch with the lovely folks at IC Markets, of course, and follow them on social media. I want to wish you the absolute very best of the holiday season and a happy new year, and of course, all the best in 2023. I know time just keeps going faster. Thanks very much. And that's it from me, by the way. So I'm going to end the webinar. It's going to hoof us all out, and then I look forward to seeing you probably in the new year. But I want to say thank you very much for your time, and I hope you found this instructive and useful. Thank you very much, guys and girls, ladies and gents. Thank you.